Hi guys, so I want to talk about candlestick charts here. And you will find that a lot of traders swear by candlestick charts. They swear by how they look. They swear by candlestick chart patterns. And they are, usually you will find that if someone is a fan of candlestick charts, they don't want to trade with anything else, right? So why is that? Well, candlestick charts provide basically all of the same information that a bar chart provides, right? If we go back here, you get the open, the high, the low, and the close, right? Well, you get that same information on a candlestick chart, right? On a chart like this, the open would be right here. This would be the high, this would be the low, and this would be the close. Here's the difference. At a glance, I can tell you exactly which days were down days, which bars were down bars. And as you expand this, it's a lot easier to see what's been prevalent, right? And why you're moving to the downside, what's been fairly dramatic, that kind of thing, right? You're getting the same information over here, if you will, right? But it looks very different, right? It's not as obvious where who's being really aggressive like it is here. And just so you understand what you're looking at here, maybe I should have done this already, but on a candlestick chart, if you're looking at a chart that has the up candles what's called empty, right, or clear, the down candles will be filled, right? You can also have a chart where both are filled, and then different colors will represent whether it's up or down. A lot of times you'll see green for up and red for down. That's the most common. But the point of it is still the exact same, right? You just want to be consistent with your colors, otherwise you can end up getting confused. But on an up chart, it will always be, in the case of a chart like this, it will always be empty, right? And the open will be lower than the close, right? So this is your open here, this is your close here, and the high will be represented by what's called these little wicks here. The wick to the upside here, a wick to the down pointing to the low here, right? And this is what is called the real body, right? This is called the upper shadow. This is called the lower shadow. Those are the two wicks, and this is called the real body. It's the same on any candlestick chart that you see, right? This is the upper shadow, the lower shadow, and the real body. Same thing on a down closing candlestick, right? This is the upper shadow, the lower shadow, and the real body, except in this case the open was here, the close was here, right? Meaning that price was down on the day, right? So candlesticks, very useful. Some of the patterns that you might see, will drive you to, here we have what is commonly known as a shooting star, right? And I'll do videos on a number of candlestick patterns just so you can see what they look like, but this one is fairly obvious, so I wanted to point it out. And that just simply means that we're in an uptrend. Price ran up to a high, couldn't sustain it, came back and ended up closing in the bottom of its range, and then you had this confirmation here by breaking the low. That's a very common kind of pattern that people look for when they're using candlestick charts. All right, I'm not going to go into any others right now because it's I just wanted to give the basics of candlestick charts, and I will do videos on a number of candlestick patterns in the near future. Okay, so again, it can be a little bit confusing just because, like, the open and the close are determined by whether you have an up day or a down day, but that is why candlestick charts are so informative. Okay, if you have any questions, please feel free to reach out as always, and we will see you at the next video.